Hi, good morning. This is Jason Sen from DayTradeIdeas.com for ntmarkets.com. Quick look at the euro this morning. It's had a little bounce over the last couple of weeks. We bottomed out just above the 2013 low, as you can see on this daily chart. We're heading, yesterday we reached as far as the 38.2% Fibonacci resistance area, which is at 131.15. We topped out just below there, which coincides nicely also with the 100-day moving average, which today is in at 131.09, which is around yesterday's high, in fact. So that should act as resistance again today. Getting a little bit overbought in the short term, and in general the trend is down. I mean, we've gone sideways for a couple of months, but this should be resistance again today then. So just watch that 131.00, 131.20 area. If however we do start to push through there, then that should open the door for further gains, and we could be headed up towards 131.80, 90 area, maybe as high as 132.30. On the subject of currencies, we'll have a look at the dollar yen. That fell to our target, having broken 170, continued lower to our next target of 98.83. We were looking for a bounce there. Looking for a bottoming out of this correction. Yesterday's low was in fact 98.87, so it couldn't really have been any closer. We did get the bounce as we expected. We should see it back up to 170. Maybe it'll just bounce around within that 98.90 or 170 range for a little while, but eventually a break higher looks likely, and who knows, we could even get up for a retest of those 103.70 area highs. We'll have to watch that a bit more closely if we do break 170. Worth having a look at the Nikkei. It's been very, very weak. We've had a very, very sharp sell-off. As no doubt you're aware, we reached 130.30, which was a big Fibonacci weekly support level. Dipped just below it. I think we got as low as 129.30, but on the grand scale of things, 100 points isn't a big deal. And we did see a very big bounce then from there yesterday, which, bearing in mind how oversold we were and what a big support level that was, it wasn't a huge surprise. Just going to highlight this trend line here, which goes all the way back to the middle of November last year. So just over 6 months. You can see that's holding the bounce at the moment, but we could, from here, 136.50 is where we are at the moment. We could revisit that sort of 130, sort of that 13,000 area again if we fail to break this trend line. But I think that would be a buying opportunity, and we would look for a double bottom and then a return back up to this 13,600, 700 area, and really probably a break higher. I think this market has now corrected and should steadily climb in the days and weeks to follow. On that note, the S&P had got very overbought and just has eased gradually over the last couple of weeks. The overbought conditions have now eased. We are getting a bit oversold, in fact, so probably not much more room on the downside. If we were to see the 16.15, 16.10 area, I think that would mark the low, and that would be a good buying opportunity. We may not even get that far. We may start to recover now in the S&P and perhaps even retest those 16.80, 85 highs that we saw around the middle or the end of May. Thanks very much. I'm Jason Sen for ntmarkets.com.